Victoria is finished. And I don't say that lightly. I don't say that for clicks. I don't say that to scare you. I say it because the numbers are screaming it. The landlords are confirming it, and the state government in Spring Street is pretending it isn't happening. Right now, as you watch this video, thousands of property investors across Victoria are quietly listing their rentals, calling their agents, and getting out. Not repositioning, not pivoting, getting out entirely, walking away from a state they once considered the golden heartland of Australian property investment. And if you own property in Victoria, or you're thinking about buying, you need to understand exactly why this is happening before you make a decision that could cost you hundreds of thousands of dollars. Let me set the scene for you. Victoria, and Melbourne specifically, was the darling of Australian real estate for decades. Strong population growth, massive infrastructure spending, world-class livability rankings, and a rental market that seemed bulletproof. Investors from Sydney, Brisbane, even overseas poured money into Victorian property because the fundamentals looked untouchable. Fast forward to 2024 and 2025, and the picture has completely inverted. What was once the safest bet on the board has become the most dangerous square to land on. And it didn't happen overnight. This was a slow-motion car crash that anyone paying attention could see coming from kilometers away. So what exactly went wrong? Let's break it down piece by piece, because this is not just one problem. This is a cascade of failures hitting landlords from every possible direction at the same time. The first and most devastating blow was the Victorian government's war on landlords. There is simply no other way to describe it. Starting with the introduction of sweeping rental reforms, the state government essentially rewrote the relationship between landlords and tenants, and they made it very clear whose side they were on. Minimum standards regulations forced property owners to spend thousands upgrading older rentals. Restrictions on rent increases made it nearly impossible to keep pace with rising costs, and the removal of no-fault evictions meant that even when landlords had legitimate reasons to reclaim their property, the process became a legal nightmare dragged out over months. For a mom and dad investor holding one or two properties, these changes didn't just eat into margins, they destroyed them entirely. Then came the land tax changes, and this is where the bleeding turned into a hemorrhage. In 2023, the Victorian government introduced sweeping land tax reforms that slashed thresholds and increased rates in ways that shocked even seasoned investors. Properties that previously sat below the land tax threshold were suddenly hit with bills of $5,000, $10,000, even $15,000 a year, on top of council rates, on top of insurance premiums that had already doubled in many areas, on top of mortgage repayments that skyrocketed when the RBA began its aggressive rate hiking cycle. Do the math on a typical Melbourne investment property today. You've got a mortgage rate sitting above 6%, you've got land tax that didn't exist 3 years ago, you've got insurance that costs twice what it did in 2021, you've got compliance costs from the new rental standards, and you've got rental income that the government has made it increasingly difficult to raise. The result? Negative cash flows so severe that landlords aren't just losing money month to month, they are actively going backwards at a rate that makes holding the property financially irrational. And here is the part that the mainstream media isn't telling you. This isn't just about numbers on a spreadsheet. This is about human beings making gut-wrenching decisions. I've spoken to investors who bought their first property in the early 2000s, held it for 20 years, did everything right, and are now being forced to sell at a loss because they simply cannot afford to keep holding. One investor in Melbourne's western suburbs told me he's losing $1,100 a month on a property he bought in 2003. $1,100 a month in negative cash flow on a property he's owned for over 2 decades. That is not an investment. That is a punishment. And he is far from alone. The data confirms what these stories suggest. According to SQM research, total listings in Melbourne have surged to levels not seen since the aftermath of the global financial crisis. Distressed listings, properties being sold under financial pressure, are climbing month after month. Meanwhile, auction clearance rates in Melbourne have fallen well below 60%, a level that historically signals a buyer's market with significant downward price pressure. Properties are sitting on the market for weeks weeks, sometimes months without serious offers. Price reductions are becoming the norm rather than the exception. And in some outer suburbs, values have already dropped 15 to 20% from their 2022 peaks. But the exodus isn't just about current losses, it's about future fear. Investors are looking at the trajectory of Victorian government policy and concluding that things are only going to get worse. There are serious discussions about introducing rent caps. There is talk of further land tax increases to fill the state's massive budget deficit, which blew out to over $12 billion. There are whispers about vacancy taxes being expanded and tightened. Every signal coming from Spring Street tells investors the same thing. You are not welcome here. Your capital is not valued. Your risk-taking is not appreciated, and we will continue to extract more from you while giving you less protection and less return. When a government sends that message loudly enough and long enough, capital simply leaves. And where is it going? The answer is written in the investment data. Queensland has seen a massive influx of Victorian investor capital, particularly into Brisbane, the Gold Coast, and regional centres like Townsville and Cairns. South Adelaide, especially Adelaide, has become a magnet for investors fleeing Melbourne, attracted by lower entry prices, stronger rental yields, and a state government that is actively welcoming investment rather than punishing it. Even Western Australia, once considered too remote and too volatile for eastern states investors, is now attracting serious attention as Perth's rental vacancy rate sits below 1%. The money hasn't disappeared, it is simply relocated to states where the math still works and the government doesn't treat landlords like criminals. Now here is the devastating irony that nobody in the Victorian government seems to understand or care about. When landlords sell, renters don't benefit. They suffer. Every investment property sold to an owner-occupier is one less rental on the market, and in a state already experiencing a severe rental shortage, with rental vacancy rates in Melbourne hovering around 1.5% and regional Victoria even tighter, the loss of rental stock is catastrophic for the very tenants these policies were supposedly designed to protect. Rents are surging precisely because supply is shrinking. Tenants are competing in 40 and 50-person inspection queues for basic properties. Families are being pushed further and further from employment centers, schools, and services. The rental reforms didn't save renters. They made their lives measurably, demonstrably worse. So what does this mean for you if you're watching this right now? If you currently own investment property in Victoria, you need to run your numbers immediately. Not the numbers from 3 years ago, the numbers from today, with current interest rates, current land tax, current insurance, and current rental income. If you are deeply negative cash flow with no realistic prospect of improvement, holding on out of emotion or hope is not a strategy. It's a slow financial bleed that could compromise your entire portfolio and your retirement. That doesn't necessarily mean sell tomorrow, but it means have a plan, know your break-even point, and be honest about whether this asset is building wealth or quietly destroying it. If you're thinking about buying in Victoria, proceed with extreme caution. There may be genuine opportunities emerging as distressed sellers create pockets of value, but understand the holding cost environment you're walking into. The land tax alone changes the equation in ways that make many Victorian properties unviable as investments at current price points. Do not rely on capital growth to bail you out of negative cash flow. That is the hope strategy, and the hope strategy has buried more investors than any market crash ever has. And if you're a renter in Victoria, understand that the shortage is not going away, it is getting worse. Every policy designed to help you is accelerating the exit of the very people who provide the housing you need. That is not my opinion. That is the mathematical reality of what happens when you drive suppliers out of a market and expect supply to magically increase. Victoria's property market is at a crossroads, and the path it's on leads somewhere very dark for investors, renters, and the broader economy. The landlords aren't leaving because they're greedy. They're leaving because they've been pushed out by a government that chose ideology over arithmetic. And when the last investor turns off the lights, the people left standing in the dark will be the tenants and communities who were promised protection and delivered a crisis instead.
If this video helped you see the reality of what's happening in Victoria, smash that subscribe button, hit the notification bell, and share this with anyone who owns property or rents in this state. They need to hear this before it's too late. Drop a comment below and tell me, are you holding, selling, or buying in Victoria right now? I want to hear your story. And if you want the full breakdown of which states are actually worth investing in right now, watch the video linked on screen. I'll see you there.